as we start to see a higher for longer mantra coming out of central banks around the world, we are seeing this growth to value rotation. On the heels of that, you're also seeing relatively strong industrial production numbers coming out of China. And so we think that that sets the stage for infrastructure, industrials, more traditional old school cyclicals coming to the fore. The critical element that we're watching from that perspective is GDP revision. We've been in a negative GDP revision cycle for about 4 quarters in a row right now. JPMorgan just took our numbers up for the first time all year for China GDP forecasts. And we think that's a positive sign that we're inflecting to the upside here.
But wouldn't all that be predicated on how the consumer behaves in China, and they have been reluctant?
They have been reluctant, but again, the good thing is markets are a game of discounting the future. The most recent data points do start to indicate a strengthening of consumer spending in China, and we take that as a sign of a green shoot moving forward. The other critical thing to watch is that we are looking at a whole series of policy conferences from the CCP as we move into the fourth quarter, which we think offers the potential for additional stimulus as we work towards year end.
Yeah, I'm just looking at some of the stats out there. You're saying that the NASDAQ has outperformed China by 40% year to date. Japan has outperformed China by 36%, but China is cheap for good reason.
At times that's the case, and ultimately we need to watch for the data to inflect to take away that good reason. And we think that there are very clear signs in the macroeconomic data, in the consumer and retail spending data, in the revision data where we are seeing a bottoming occurring.
Do you deeply favor India over China? Is it an India versus China story, or do you like India from a more secular standpoint?
It's a great question, and I think you segment the conversation into 2 parts. One, from an investor perspective, you've very clearly seen fund rotation out of China and into India, which we've talked about on prior programs. From a bottom-up analytical perspective, they're extremely different stories. The driver of the 2 countries are very different. I was in India recently looking at the multitude of cranes outside our office window. The green field where people used to play cricket is now a construction site for the high-speed rail going out through Mumbai. The statistics for infrastructure spending in Mumbai alone are mind-boggling. And so if that's a critical component to driving economic growth, it's very clear that for the first time in my travels to India for the past 25 years, you're seeing a very serious effort in that space.
But what's the upside? Because India is an expensive market, purely in terms of multiples, right? So where are you looking at pockets of opportunity from a value perspective?
It's a great question, and you have, again, a whole series of variables at play at both markets. In China, expectations are relatively close to rock bottom. Earnings forecast revisions are extremely negative. You don't necessarily have those dynamics in India. In India, you have 2 challenges moving forward. Number 1, oil, as we discussed. Every $10 a barrel takes about 50 basis points off Indian GDP growth. You also have 35% weaker monsoon rains in August. In some areas, the lowest in 100 years. So there are challenges to the market. We do need to be very bottoms up and sector specific. Our favorite sector in India continues to be the financial services sector, where we see the upside potential for net interest margins as well as overall lending activity.
What about India benefiting from reorientation of supply chains out of China?
It's a great story that we're just not seeing in the data yet. And so foreign direct investment into India on a year-to-date basis is down, not up. Again, the key beneficiaries from a South Asia perspective year-to-date, or let's say the last 2 years, have really been Indonesia and Vietnam, not India. As that infrastructure spending proceeds, could we start to see that inflect in India's favor? It's something that we're watching very closely.